Hi everyone, I'm Adam from Neopay. So we're specialists in compliance and regulation. Neopay really specializes in the e-money sector, so payment institutions, e-money institutions. And Bitcoin being kind of within that realm fits within our competency. So when Paul spoke to me about coming and talking a little bit about regulation, I was really up for it. Well, if you don't mind, I'm going to refer to my notes as I go through it, because I wouldn't want to miss a couple of points along the way. If you've got any questions, feel free to intervene. So where is Bitcoin going to be in terms of regulation? It's difficult to say. Some people say, well, you have to look at it from a currency perspective. Is it currency? Is it not currency? Who knows? People say it's currency, you've said it's currency, but do the regulators think it's currency? That's another matter. So the scope of the presentation today will be to find out whether Bitcoin does it fit within the definition of electronic money from the perspective of the Electronic Money Directive, the e-money directive. And what are those challenges? What challenges did e-money face from a regulatory perspective? So e-money's been around for 13 years now, since the e-money directive 2000. So we want to look at those challenges and kind of learn from that experience and hopefully be able to transpose it to what Bitcoin may face should it become regulated. And then we can look at what opportunities may arise if and when Bitcoin does become regulated. So from regulated business models, so you were talking about payment institutions, e-money institutions, even forex brokerages and the like. And then lastly, to give you a practical insight in what the face of regulation will be like. So what will it be like to be regulated by the Financial Conduct Authority? So, why talk about Bitcoin in the context of e-money? As I said, e-money is really the test case for Bitcoin. We understand those challenges, then we can transfer it to Bitcoin. But also a key point is, with e-money, should Bitcoin be recognized as a currency, then a lot of the business models, the existing business models for Bitcoin, a lot of them will be e-money institutions or payment institutions. So those two categories of business models are going to be very popular for existing businesses in the Bitcoin industry. So for example, BTC wallets, BTC prepaid cards, BTC payments, or BTC FX payments. It's all going to be very popular, and that will fit within two brackets, one e-money institution or payment institution. So is anyone here, it'd be interesting to know, is anyone here actually running a wallet, providing Bitcoin payments, or involved in that in some way? Okay, a couple of people. What other sectors do we have here in terms of Bitcoin? What kind of involvement do we have? Do we have maybe on the speculation side? What kind of businesses do we have here in terms of Bitcoin, or is it more interest? Mining, exchanges. Pardon? Okay, excellent. So exchanges, obviously, that would become a regulated business should Bitcoin become recognized as a currency. So let's look at the definition of e-money. E-money Directive 2000, I mean, there have been some iterations since. The latest one was in 2009. So let's look at the latest definition. The latest definition says that e-money is stored monetary value as represented by a claim on the issuer. So what is that? That's storage, monetary value, and debt, effectively. Let's apply that now to BTC. Say I'm a BTC wallet. If I'm storing BTC, then BTC also has value. And if I'm storing that for someone else, then I'm in debt to them. So really, I'm fitting in within the definition of e-money in the directive. But the reality is, it doesn't fit. How many e-money institutions do you know in the Bitcoin sphere that are regulated? Anyone? There aren't any. But the interesting point is, it may be a matter of reading, because some authors have said that the directive, it says, and I haven't seen the wording in the directive, but the directive seems to say, according to these authors, that e-money should be redeemable for government-issued currency on demand. So maybe it's just a question of interpretation here. But the practice is different. The practice shows that authorized e-money institutions today only handle real currency, euros, dollars, etc., rather than virtual currencies such as Facebook credits, Linden dollars. Key point is, if, say, for example, Facebook were to switch from Facebook credits to US dollars, then they would effectively become an e-money institution and would need to obtain the requisite authorization. And well, you might think, well, that's a bit of an arbitrary divide, because effectively both are currency. If something has value in exchange, it's currency. That's the general definition. One is issued by the Federal Reserve, one is issued in Palo Alto by a social networking site. But this is the biggest roadblock for BTC at the moment in terms of obtaining authorization, this arbitrary interpretation of currency. And so let's look a little bit in more detail at currency. How do I jump this? The concept of currency is government biased. Let's take the definition, the legal definition in the US of currency. It's defined as legal tender, in circulation, and customarily used as medium of exchange. And when you research, actually, the first requirement, which is legal tender, you find that the concept is essentially linked with the privilege of governments or central banks to print money and control the supply of money. Therefore, culturally, there's a conceptual association, however arbitrary, between currencies and central banks. But how does that fit with BTC? Well, as you all well know, the central bank of BTC is a mathematical formula. And the users of BTC are essentially the guys in the Royal Mint, in the production line, sitting down solving complex transactional problems. And hey presto, more money is solved when they complete it. So rather than central banks and Royal Mints on one side, we now have mathematics and peer-to-peer networks. It doesn't quite fit with the traditional mold of what is a currency. Now, have any of you ever been to Tuvalu? No one? Does anyone know where Tuvalu is? Yeah, Polynesia. I personally didn't know where Tuvalu was until earlier today. Why have I asked this? It's a bit random. But according to US literature from the Crime Enforcement Organization, the difference between a real and a virtual currency is that a virtual currency does not have legal tender in any jurisdiction. Consequently, the biggest barrier for BTC is that it's not recognized as a currency in any jurisdiction in terms of legal tender. So my thought is, consequently, the fastest way of getting BTC recognized is to have one state adopt it as its own, such as Tuvalu. This is going to cause, obviously, a domino effect. If BTC is recognized in Tuvalu as national currency, then we can postulate that it will be recognized in the UK as foreign currency. So who's going to call up the government of Tuvalu first? Who actually wants BTC to be recognized as legal currency? Okay. I heard they accept Australian dollars, so they might want to add BTC. So for now, e-money is associated with traditional currency. Once it's been recognized by the regulators, then the doors will open up for licensing, FCA licensing, Financial Conduct Authority licensing. Now, if anyone wants to actually find out the official stance of the FCA, and they got a spare 5 to 25 grand, they can submit an application and see how far they'll get with the BTC business. But our stance at our company is that we're waiting for official guidance from the FCA or official recognition that it is a currency. Now, you all well know that in the US, BTC is currently being regulated for anti-money laundering, AML purposes. HMRC said it's a little bit out of their remit, but that can change. So FinCEN, Financial Crimes Enforcement Network, has started regulating BTC providers. You see now Mt. Gox has went and registered with them. So in summary, we can see that BTC is not recognized as real currency. Consequently, it is not e-money for now in terms of the e-money directive. If we want it to be recognized as currency, then we need to find a country to lobby. But we're at the tipping point anyway. FinCEN's recognized that they want to regulate it for AML purposes. Things can change thereafter. If we get the green light from the FCA, if they produce some guidance shortly, then we'll be looking to authorize people. Sorry. So let's look at the challenges. Oh, sorry, the challenges.
Sorry, you can go up and down.
Oh, thanks a lot. Just one up from that.
Sorry.
So yeah, the purpose of this talk today was to look at also the experience of e-money. So when you know that we reached that tipping point, that BTC is recognized as currency, then suddenly people are going to be applying for electronic money licenses and payment institution licenses. So if we can look at the challenges a little bit, hopefully it will give us an idea of how BTC will be received. It's been 13 years since the first European Union directive. 50 million euros were stored in 2005. By 2009, we're looking at 125 million. The uptake of e-money is thanks in part to the forward-thinking nature of the e-money directive. That said, part of the challenges faced to e-money was in fact due to the regulations themselves. Let's look at some of those challenges, the key challenges. The first challenge is EU law itself and the fragmentation that ensued. The second challenge is the perception that e-money is a susceptible device for fraud and money laundering. And then the third challenge is at the industry level, the banking community, and whether or not it wanted to do business with e-money institutions. So fragmented application of EU law. The EU created a single market for e-money. And essentially the concept was, if you were authorized in, for example, the UK, you could passport your license out to the rest of the other states of the European Union. And the idea was with minimum hindrance. However, that said, there were substantial barriers to people transporting their license out to other states within the EU. And that comes not from the e-money directive, but from the anti-money laundering directive. And why is that? Because the AML, anti-money laundering directive, is what's known as the minimum harmonization directive. That means countries cannot go below the EU standard, but they can go as far above it as they want. They can impose the most stringent requirements that they want from an AML perspective. And that directly impacts market penetration for e-money. So an e-money institution wanting to passport will need to consider the legality, they'll need to conduct research, they'll need to adapt each and every one of their policies and procedures to meet with the local AML requirements. They'll also need to adapt their products themselves, the prepay cards, whatever, to those local markets. Let's take an example. Say you've got a prepay card and you introduce it in the UK. If customer deposits less than 150 euros in a month, then you don't have the requirement to identify the customer. It's a bit of a loophole in the sense that you exert simplified due diligence. Because it's a low-risk product, people are only depositing less than 150 euros, you don't need to go through the same due diligence checks. However, in Germany, the threshold is 100 euros. Now that might be not a massive difference, but it means you need to repackage your product. Another thing about Germany is BaFin, the regulator, regulates providers of e-money as well as the products themselves. So if they don't like your products, if they think it's susceptible inherently to money laundering, then they'll just ban it. So that's an interesting point to follow on, that there's some cultural variation between the regulators within the EU. You look at the UK is a very proactive regulator for e-money and payment institutions. On the other hand, for example, Ireland, which has a massive tech community, the regulator there, for as well as I'm aware, hasn't actually issued any licenses to date. Now, the perception of e-money in the beginning, and still is that it's a device inherently used for fraud and money laundering. The reality is that cash is probably more prone to use in the underground economy than e-money itself. So there's a real divide between perception and the reality. But the perception is extremely powerful in holding back the drive for innovation. How do we challenge that perception? It's through greater controls and higher standards within the industry with a coordinated approach. If the industry speaks one voice and keeps the standards high, then we can change that perception. So how does that apply to BTC? Well, BTC has a bit of baggage from the darknet days and Silk Road, whatnot. Silk Road's been shut down, yeah? Is that right? No? Still on. Regardless of your moral view, in a way, Bitcoin needs to shake off a little bit of this baggage, so to speak, in order that the perception of it at a general level can rise above the underground. The interesting thing about BTC, as opposed to e-money when it was conceived 13 years ago, was that people are in a better position to embrace the concept. People are skeptical now about the traditional banking system, and there's a lot more innovation in finance. It's becoming commonplace, the fintech industry, whatnot. And also an interesting thing is the e-money directive and payment directive and the ensuing growth that arose in that industry clawed away from the banking industry a lot of the sector. So now you've got e-money institutions effectively competing with banks. So that brings me to banking, the industry challenge. April this year, we saw a lot of payment institutions lose their accounts. Why? Because of a policy change in a few of the major banks in the UK. They decided that they didn't have a risk appetite for those payment institutions. So from one day to the next, the little foreign payment institution is losing not only their bank account, but their livelihood. So you'll find that the key point is it's going to be a mountain to convince the regulator, but then afterwards there will be some other challenges, and that will be primarily with the banking system. So who survived the April fallout? It was the companies who were completely spotless, whiter than white, who had AML protections, Bribery Act protections, all different types of controls. Now cynics say that the banks don't really want to do business with e-money institutions or payment institutions. Payment institutions are trying to beat their FX rates. E-money institutions are effectively acting as deposit takers, especially now where interest rates are so low. So the moral of the story is, for Bitcoin, if you have bulletproof compliance controls and you don't bite the hand that feeds, then you'll survive any fallout with the bankers. So if you've got a good partnership with the bank, then use their forex rates. Incentivize the bank to continue to do business with you. Another really interesting thing that comes from this, the challenges faced to e-money, how did we mitigate those? Well, we mitigated those through a coordinated effort. And one of those key things is through setting up associations. We've got PIF as an association for payments, for example. You need a focus group that can stand your ground. Now, that's not only important from the perspective of lobbying, but it's also important from the perspective of standard setting. If you have good internal standards that are kept in check by the association, then it has a positive effect for your customers and also a positive effect for regulators. We take them more seriously. So from this, another thing, if you don't, to start to develop the partnerships that you need in case Bitcoin does become regulated. So your banking partnerships, for example. I think Bitcoin Deutschland, they have an extremely good partnership with Fidel Bank. Those are the types of partnerships that you need to be thinking about. But at the same time, banking system, you can't put all of your eggs in it because, we know that central banks impose haircuts, government policy changes. So you need to have contingency plans with banking. So at least have one or two other options if possible. So the next section is assuming that Bitcoin is recognized as a currency, what type of regulated opportunities are there for the market? Well, we spoke about BTC, e-wallet, prepaid cards. Those are the kind of immediate businesses that may emerge. And they'll be requiring licenses under the Electronic Money Directive and Payment Services Directive. Then on the speculation side, so selling futures and options, essentially financial instruments related to Bitcoin. That will require a license, but this time under the Financial Services and Market Act. So we all know about the market for speculation with BTC. It's a big one. And Forex speculators will probably see it as a holy grail due to its hyper volatility. But the interesting, let's just say, paradox is that if BTC does become regulated, then in some ways the emergence of a Forex market, derivative markets, will hopefully be able to stabilize the price. Now that's maybe a controversial point of view. Why is that? Because essentially, if you create a derivatives market, then you allow people to hedge their risk moving forwards so that you can future-proof yourself on the price of Bitcoin. So for example, I enter into a private contract with someone in the future to purchase Bitcoin and I maintain that option for 12 months, that's a way of stabilizing, let's say, the price of Bitcoin and allowing me some certainty in making commercial decisions. If Bitcoin goes up and down every day, then I don't have that certainty. Another opportunity is investment funds. We saw Exante, first investment fund, first hedge fund in Bitcoin, licensed in Malta. Those are the types of funds that will emerge should BTC become official currency. And then if you fancy yourself as a financial advisor advising on the trajectory of Bitcoin, its fluctuations, then you'd need to register the FCA is an IFA, independent financial advisor. Another interesting, maybe very peculiar business model that may arise is vaulting. So putting your private keys in a vault, or your bitcoins in a vault. The e-money directive says specifically, if you store monetary value and you hold that as a debt for someone else, then you need to obtain a license. So if I'm vaulting bitcoins, then effectively I may be required to obtain a license.
Does that license mean that the government goes to you and say, "Can I have a look in your vault?" What does the license mean?
Yeah, well, this is pure speculation on the vaulting license.
On e-money services, if you have an EMP license, are governments able to say, we have a warrant to look in your vault?
Okay, access to your vault. Well, generally speaking, if you're regulated, then there's no stone that the regulator can't unturn, or otherwise they won't regulate you. That's the general principle. Okay, so there are, and certainly offline we can talk in more detail about that. There are a number of opportunities to set up regulated business models once BTC is recognized as a currency. In fact, and I'm very confident about it, it will create a new financial ecosystem. And that's why I was tongue-in-cheek talking about Tuvalu, but if Tuvalu turns around and recognizes BTC as local currency, then it's going to become the Cayman Islands of Polynesia. A lot of investment will flow in. People want to set banks up. There's going to be a lot of growth, and it should be taken seriously. So let's move on to the next section, which is if you dream about cards or forex brokerage houses and Bitcoin, then you need to look at what this regulation will look like. Big proviso here is we're assuming obviously that BTC will be regulated, and that it will be regulated in the same way as e-money. It's all guesswork. You need to be thinking for an e-money institution about 1, safeguarding client funds. 2, you'll need to have a transparent corporate structure. 3, most importantly, you'll need to have AML procedures, know your client procedures. You'll need to appoint a money laundering reporting officer. And 4, you need to think about risk management. That will need to become part of your system. So let's look at safeguarding. Just like a bank, e-money institutions are subject to prudential supervisory requirements. That means they need to have a designated client account. And a client account means that the bank itself, where it's stored, cannot be using those funds for any other purpose. And that account needs to be reconciled regularly. You need to be thinking, if you're applying for a license, to have a regulatory business plan. If your business plan shows that your target market is, say, 80% in Germany, then really you need to be applying to BaFin in Germany for your license. Regulators really only want to deal with you if you've got a majority interest in their market. You need to be looking at how you're making money. If you've got commission arrangements, then you need to think about one of the key principles of FCA regulation, which is treating customers fairly. Risk management, you need to be in a position to identify and manage your risk throughout your organization. You probably already do this intuitively, but it needs to be documented. We usually, for an e-money application, pull out at least 13 different categories of risk. They vary from financial operational, AML, financial crime, and fraud. Capital requirements, probably one of the biggest questions everyone asks. If you're looking at an e-money institution with full authorization, so passporting rights around the EU, you need 350,000 euros base capital, or 2% of outstanding e-money over 6 months. For a payment institution, it's between 20 to 125,000 base capital. So, conclusion. My advice is prepare for the transition. HMRC, it's a bit of a grey area. They don't touch it yet, but they may change their tune. We know in the US they started to regulate it. So be prepared. And the key point is start going AML crazy. Develop those internal controls like transaction monitoring, identifying suspicious activity, know your client, request a passport, utility bill, record keep. Be in a position that if anyone asks questions, you can present the evidence. Build strong partnerships with banks, like with Fido Bank and Bitcoin Deutschland. Those key partnerships will see you through once you become regulated. And think about plan B in terms of infrastructure and banking. Create associations. That will standardize the level of quality, but more importantly, associations are a form of de facto regulation. So an association will impose a standard which members need to meet. That's essentially what a regulator does. And say BTC is never recognized as a currency, then do what's best for the industry and best for your business. Coordinate and raise standards and set up associations. Good luck. Any questions? Absolutely, yeah.
So you say go AML crazy. But the way I understand it at the moment is that e-money regulations apply to people who are issuing e-money that is backed by existing fiat currency.
Yeah.
And then you have to be worried about where that e-money is being spent.
Correct.
So what types of businesses should go AML crazy? I mean, you've obviously got people like miners who are essentially producing money, you've got exchanges, and then you've just got normal merchants like shops who are accepting bitcoins. I mean, surely they don't have to go AML crazy. There must be some kind of line at which certain types of businesses need to do this, not all Bitcoin businesses.
Yeah, fundamentally, it really depends which category you're fitting into the previous business models. If you're fitting to any one of those categories today, then that's when you need to be really thinking now about AML. Now, obviously, if you're a merchant, you're accepting transactions, if you're selling produce, products, maybe it's very low risk. But if you're providing a service, company and corporations and people are paying in Bitcoins, then you need to be thinking about AML. What are people using your services for? What they could potentially use it for? So it's a bit granular, really, when I talk about going AML crazy. I'm saying that really is kind of hyperbole so that people appreciate that it is going to take a little bit of time to get those controls in place. And then once they're in place, things just run kind of like swimmingly. But yeah, I mean, your average e-shop generally isn't regulated for AML purposes. Sorry, does that answer? Sorry.
Yeah, I personally think the e-money regulations in their existing form, don't apply to Bitcoin. They could potentially apply to if you're issuing other currencies that are backed by fiat currency on top of Bitcoin, or another virtual currency that's backed by fiat. But the way the rules are at the moment, it's because it's not issued by anyone, and you don't know what happens to it once you spend it. Essentially, you've got no control over it.
Yeah.
And the rules either need to be changed drastically, or at least the different rules.
Yeah, I mean, the thing is, e-money regulations gone through 3 iterations at least since 2000, and every time they change the regulations, they change the definition. So, as they're changing with the times, and the last time that they tweaked it was with the idea of future-proofing the definition so that it could apply to various different formats. Now, central bank, or the European Central Bank, has already done a paper on Bitcoin. So they're fully aware of, kind of at the European level, of the implication and the growth within that market. So, I mean, in the foreseeable future, if someone in another country has not recognized it as a local currency, then that might be an option. These regulations are subject to lobbying, subject to Parliament's approval, go through a whole process, but eventually I wouldn't imagine that it's not possible for Bitcoin to fit within them.
So that's what we need to be looking at, the e-money regulations, basically.
Yeah,
Iterations on that.
depending on your business.
Yeah.
If you're providing gambling business and using Bitcoin, then you need to be talking to the Gambling Commission. If you're, providing consumer credit we're using Bitcoin, then you need to be speaking to the Office of Fair Trading for now until next year, which will be the FCA. If you're providing brokerage services, you need to speak to FCA. So you've got various regulators, and that's just at the national level. So it's just staying aware and building the controls now, and so that when the green light happens, you're good to go. Yes?
Have the British authorities made any indications about their plans to regulate Bitcoin?
British authorities.
The FCA or the Prudential Authority?
I've heard nothing, but maybe someone has. Someone heard something from? Oh, the question was whether British authorities have given any guidelines with regards to the regulation of Bitcoin. And I said I haven't read anything from the FCA about it.
In the revenue, not regard
Yeah.
AML in part of the Bitcoin procedure. And the FCB officially now don't regard Bitcoin as money for the time being.
Yeah.
But it might be in the future. So anyone setting up a Bitcoin exchange in the UK, which you can now do without resolution.
Yeah.
You should do it with caution. You should actually try and not try. You must comply with AML and KYC rules, because the rules may come in. At the moment, Bitcoin is not valid, it's not money, it's just a value transfer system.
Yeah.
It's like barter.
Yeah.
As far as FCA.
Yeah. Yeah. So yeah, changing times in S. Sorry, what was your name? Michael was saying, things can change, and HMRC don't recognise it currently as currency. Anyone else?
If you're not an exchange, but say you're processing payments from any point, you're holding currency for someone else or your client currency, and then they cash out into does that count as an exchange even if you're not physically exchanging or making a direct exchange? If they have an account which has a certain value and then you through that process.
So you're paying out basically.
You can pay out Bitcoin or apps.
Yeah. Well, I mean, you're effectively using a third party, aren't you, to do that, unless you're quoting the Forex price and then doing the payment.
If you're physically holding the Bitcoin and the money,
Yeah.
and then making payments, does that count as an exchange? Go for a third party, they should make the payments through to you, and then you're giving an option to which way it comes out.
I don't know, I have to look at that. But I would say, if you're making payments out in, say, fiat currency, then generally speaking, you're using a third party which is authorised as a payment institution. So whether that be, some kind of Western Union or some other money transmitter, currency cloud. We can talk about it after. Yes? Yeah, well, I mean, for HMRC, their guidance has been, we don't recognise it as currency currently, but when we do, you need to hurry up and get it registered with us. But to be honest, registering with HMRC is just a paper form and you send it off. But in terms of internal controls, that's another matter. And that's why I go AML crazy now, so that you've got those controls ready for when you just send that piece of paper to HMRC. Now, that's just for HMRC. If you're providing a financial service, then you need to apply to the FCA, which is quite a drawn-out process. And generally, timeline, average application would take between 6 to 12 months. If the FCA is grandfathering someone in, then what they'll do is they'll give them, for example, interim permission, so that they've got the time to apply for the license.
What about the UK? I believe in America regarding that, they're actually being backdated as well. So it might come in the same stage today, but they'll still want stuff from 3 months ago.
Yeah, so the really interesting point here raised was, will your activity after you are registered, so the activity before you register for money laundering purposes, be scrutinised by the regulator? They're saying in the US that it will be.
I don't know if you've heard about it, with the internet hackers
Sorry.
So I'm just passing on to you.
I don't know if you've heard about how the Internet Hacker in the US has been helping some big organizations. And we know this is like the most hostile, it seems to be fairly accepted, it's one of the most hostile legislative systems for businesses. I'm just wondering how you think, if you've got any opinion about how credit unions can play a role in helping organizations get off the ground.
How, what, sorry? Credit unions.
Credit union as a legal structure, maybe a way of putting credit worthiness, or helping people build businesses by using credit unions, if that's kind of the way to the system in the UK.
Yeah, but relating that to Bitcoin.
Internet Archive set up a credit union, and they are offering banking services to Bitcoin companies because they're more open to the idea.
So banks are very hands-on.
Yeah.
We don't want to touch it, it's too harsh. The credit union kind of mediate that, so that's
So essentially we're talking about forming partnerships. Yeah. So look, the point is the big exchanges, they manage to find good partners, banking partners like FIDO. In France, I think Credit Mutuel is with one Bitcoin exchange. So it's still possible to work with the banks. How you get to that meeting is another matter, and how you present it is key. If you've got everything, really your business plan is 100% awesome and all your controls are in place, then that's increasing your probability of you obtaining banking. Now, let's just look at it from a jurisdictional perspective. There aren't just banks, that can service people in the UK from the UK. You don't just go to Lloyd's. You can go to Malta. Don't go to Cyprus, but there are other jurisdictions that may want to entertain more of a left field idea. So but in terms of alternative finance institutions, I haven't looked into that. But all these are all interesting things that we can maybe pass around so that we build that awareness. Is it a good thing? Well, the point is that as I see it, regulation of Bitcoin is intrinsically linked to whether it is or is not legally a currency. So if it is a currency, then it's going to be regulated from a financial regulation perspective. That's the crux of it. And it's just if you want. I'm not here to say whether it should or should not be a currency, but in my opinion, I would want to see Bitcoin reach its full potential as a currency. Well, it's not regulated by a small country because essentially all it's doing is recognizing it as its local currency. I mean, it's all very fictional, it's a bit Star Trek-ish, but essentially, Tuvalu, they recognise Australian dollars as legal tender. They do not control the central bank of Australia, so they're subject to the highs and lows of the Australian dollar. So in a way, there's some fragility of them even accepting foreign currency. But if they're willing to accept Bitcoin and Australian dollars, then surely they'll be willing to accept Bitcoin.
They actually have a governor and they print tortoises on the Australian dollar, and that's how they
Wow, that was awesome. Sorry, what was that?
They print tortoises on the Australian dollar, and there's actually a governor of the bank too, and they have that's not recognised as legal tender in Australia, but you can go the reverse around.
Well, that's amazing. So has that idea gone out of the window then? Should we find another country?
I mean, you can the governor.
Well, I'm just overwhelmed with the amount of knowledge in this room about Tuvalu. I should have chosen Mars. Yes. That's the thing. Why do people go offshore? You know, it's all tax planning, so to speak. But also another factor is this, okay? If you're a small brokerage house and you haven't got 100 grand to spend in the UK market, but you still want to get going, you've got a viable business model, you want to get regulated somewhere. So maybe people are going to turn to the offshore markets because it gives them at least a foothold. And also because offshore markets in emerging markets are more willing to entertain the ideas, the innovative ideas. No, I wouldn't be able to say, yeah. Well, there's no point really because there's no liquidity in the market. So you need the tier one banks. You need a really liquid market where people are issuing prices for Bitcoin, and that allows the derivatives market to be much more competitive. But the key point is, if you're trading in a financial instrument, then you need to be licensed. Now, a financial instrument, a derivative based on a currency, is a financial instrument. BTC isn't legally a currency, so a derivative based on that is not a financial instrument. That's the logic. And in any event, there are already exchanges out there, derivative exchanges. There's ICBIS or something like that. Yeah, but that's a peer-to-peer exchange. So you don't have like an institution pushing their prices into the exchange. It's just like pricing between two individuals that want to trade in derivatives on Bitcoin. Okay, thanks very much. If you want to ask any other questions, I'll find here.